everyone. Welcome to another episode of The Silicon Dreams on Radio Zindagi 1550 AM. This is your show host, RJ Soniya. And with me today, joining us all the way from Singapore, we have Markus. I'm going to go to Markus to let him introduce himself. But before that, remember you're listening to another episode of The Silicon Dreams. And today we are going to talk about the past, present, and future of the cryptocurrency industry and what all has it led to. So let's go to Markus, who is the head of research and strategy at Matrixport. And we are so thrilled, Markus, to have you with us here in the studio today. I know it is morning in Singapore, so thank you for joining us. How are you doing, Markus?
Yeah, very well. Thanks for having me, Sonia.
Thanks for joining us, Markus. Besides the fact that you are the head of research and strategy, and folks, if you haven't read Markus' LinkedIn notes or if you haven't subscribed to his newsletter, go and look him up. And I'm going to ask Markus to share more information because these newsletters, the posts he shares, they are such amazing nuggets of information, especially when it comes to covering the crypto industry. I feel like everybody has to take a look at them. And I personally follow Markus's newsletter every single week. So it's the newsletter is not a paid newsletter, it's a free newsletter. So this is definitely not a shill for his newsletter. I'm not trying to sell his newsletter here. It's a free resource, but it's a resource that if you're taking even 30 minutes to glance through it, you will really get a very well analyzed update, not just something that's very superficial, but something that has great insights. Now, I think I've done enough praise for Markus. Let's just go to Markus and ask him to introduce himself. Markus, would you introduce yourself to the fabulous audiences listening to the Silicon Dreams?
Yeah, thanks so much for the praise. I didn't actually expect this, So I'm the head of research at a company called Matrixport. We have around $4 billion worth of crypto on our balance sheet that we manage for clients. And we are like an institutional investment management platform, basically. So I'm the head of research. So I come up with ideas, market analysis. How should people invest? How can they make more with their crypto? And that's really our slogan. How can you make more with your crypto? And it can include everything from very simple, is it time to buy Bitcoin now? Is it time to take profit? Or to have like more complicated strategies of like call overwriting or even some other DeFi strategies. We look at everything like this. We publish, of course, research to institutional clients. But of course, some of the research we unlock, we make it free for everybody because we really want to help educate everybody in this space. And, as Sonia was saying, actively on LinkedIn, wrote a book and so on, and publish really research every week, basically.
Thank you, Markus. So first of all, folks, like Markus was saying, right, he works at a company where he is the head of research and strategy, and they have over 4 billion in assets under management. And he primarily is responsible for researching how the markets are doing. So they are able to keep growing those $4 billion, right? So you can trust Markus's analysis. Obviously, no analyst can claim to be perfectly perfect, but at the same time, it is always nice to follow along a couple of good analysts. So you have, even if you're not trading, you have a good understanding of how the market is performing. And Markus doesn't just work on the decentralized aspect of things. He is very knowledgeable in the area. As he said, he has also written a book, and we'll talk about the book too. But at the same time, his views are on coming from both sides because he has a fantastic understanding of the centralized finance world as well. A lot of you listening in might not know what centralized finance is, but centralized finance is finance as you normally know it. The banks that you deal with, the currency systems that you deal with, the fiat currencies, the sovereign currencies created by the governments, US dollars, Indian rupees, European pounds, all of these are part of the centralized finance system, and we call it centralized because it's all managed by a few centralized entities, whereas in decentralized finance, no single entity owns all of it. So we'll talk about some of those differences also later on. But Markus, right, before Matrixport, you used to have your own hedge fund. Is that right?
Yes, I used to run my own hedge fund. I also worked for other large hedge funds like, Millennium, spent almost a decade at JP Morgan's proprietary trading desk. So my background is really more trading, coming up, with ideas and really managing money. And I think, bring the same kind of framework to crypto. And I think, as you said, not everybody is 100% correct. But what we were trying to find, finding the odds, when are the odds in our favor? We're looking at a lot of stats that are quite interesting. For example, we're coming into July now. And of course, July, the last time, for example, like the Nasdaq went down in July was, I think, 2007. So July is usually like a very positive month for tech stocks in the US, but it's also a very positive month for Bitcoin. So Bitcoin tends to rally by 11%, and I think the last 8 out of the last 11 years, Bitcoin actually has been up in July. So we look at some of those stats. What does it mean for the year? When is a good time to buy? And sometimes there is a good seasonality impact, and we just kind of highlight those stats to people.
That's amazing, right? Like, guys, just from those couple of nuggets that Marcus dropped, you probably see how how well he or how seriously he takes his research, right? Because he is not just looking at the data in the presence. Obviously, when it comes to finance and trading, a lot of movement is cyclical. And then also you have to look at a lot of the data and charts and patterns from the past in order to predict. This is true for any sort of predictive modeling, right? You have to have data sets that you can look at, that you can make sense of, so you can leverage that knowledge to predict what could happen just based on the movements you see. So it's going to be a fun conversation, and people are always thinking about, hey, what do we do with our money? So, you're going to talk a little bit about money here. So, Marcus, let me ask you this. Obviously, your entire career has centered around trading, right? But you used to trade a lot of just traditional dollars in a way. You worked with hedge funds, you worked with JP Morgan Chase, you worked with all of these institutions. How did your journey into crypto really start? When did it begin? How did it begin? And what made you go heads over heel in the entire decentralized economy?
Yeah, it's always an interesting point to ask people, when was the first time they have heard about it? And a lot of people remember those facts. And I think my journey so far started in January 2013, when the person next to me started to buy Bitcoin on Mt. Gox, and we looked at it, and it took like a week to get a confirmation, and you had to buy via credit card, and it wasn't really that clear. And I think because I've been for example, in Hong Kong living also for a long time, and crypto has been around there also during the whole time. At one point in 2015, when I launched my hedge fund, I had an analyst who was trying to set up some actually exchange arbitrage for crypto. So trying to take advantage of higher prices on one exchange and buying on the other where the prices are cheaper. But he couldn't get this going. And of course, my main focus was, to run the macro hedge fund. But that was kind of the first time we tried to really go in and make like a little institutional trading business around it. And then, of course, when I launched my hedge fund, at one point, at a later point, we had like 10% of our assets in crypto. So that was kind of like what we could do. And then at a later point, again, I wanted to be like full-time in crypto. And I joined a company called IDEG. There's kind of like a crypto conglomerate, mainly based in Asia. So there's sort of like the galaxy, Mike Novogratz's galaxy of Asia. So they have a lot of mining, they have a lot of VC. And then, of course, you have 14 crypto funds, and I joined there as a chief investment officer. And then I joined really, last year, this company called Matrixport that was started by a guy called Jihan Wu, and he controlled at one point 80% of the Bitcoin mining machine market. So he has been, of course, one of the big OGs in the space, and it's just interesting to work with those kind of people that have really been all in really from the beginning of the industry, and really have been instrumental in driving the industry up. So
That's amazing. Obviously 2013 congrats on completing a full decade in the decentralized industry. Guys, just for your information, Bitcoin itself was launched in 2009, and 2008 is when the white paper for Bitcoin had come out. And the founder of the writer, the creator of the white paper, the creator of Bitcoin is actually a pseudonymous entity. So we don't know whether it is a he or a she or a group of people. Nobody knows who this person is, and they are no longer active. Satoshi Nakamoto is the person who actually wrote the white paper. Person or a group of persons, I'm just going to say, Satoshi Nakamoto is actually the entity which launched Bitcoin. So Bitcoin was launched back in 2009, and then 2012 2013 is when it really started gaining popularity. A lot of people were talking about it. And as you mentioned, Marcus, right, you saw your friend or your colleague trying to buy Bitcoin on Mt. Gox. How was the experience, by the way? Because Mt. Gox was one of the first big crypto damages we have seen, right? And I believe some of the victims of Mt. Gox are probably going to start getting their money, some portion of their money back this year. But literally, 10 years later, if I'm not wrong, Mt. Gox went down just around the same time, right? I don't remember whether it was 2013 or 2015. But I will let you're the expert here, right? I will let you do the talking. Like, what was your sentiment, right, around the whole Mt. Gox thing? Did you actually lose any money, or anyone you knew lost money in Mt. Gox? And I know even though there is a recovery process going on, people are not going to get everything back. So I'm just going to still call it a loss. But a lot of people who are even listening to it, I feel like a lot of our audiences would have heard about FTX, because Sam Bankman-Fried was in news all over just a few months back, and again, for all the wrong reasons. But Mt. Gox was an even bigger disaster, but at a time when not the entire world was following crypto. So why don't you go ahead and just, share your thoughts on that? Because obviously you're also an analyst. So what do you think, with the whole Mt. Gox fiasco? At that point, did you think that Bitcoin would be able to recover from it? What were your thoughts? And then since then, how have you seen cycles like this, right? Where something damaging, a big event could happen to crypto, it goes down, it recovers. Maybe you can talk about those things.
Yeah, I mean, the Mt. Gox case is really, quite interesting, because a lot of crypto has been lost, and apparently the exchange has been skimmed of coins for 2, if not 3 years, so gradually, and they didn't really notice this. And again, there was also an accounting issue. So they were managing Mt. Gox just with like 30 people, and they were controlling literally like 70% of all the trading volume. So again, we have like an exchange, a centralized exchange that controlled really the market with like 70% of all the volume. And I think it's really important to repeat this, because over time we have seen when a few exchanges control really the market, they don't really last, because something is always happening, something always goes wrong, be it the hack, be it some other misappropriation of coins and tokens. But it's almost like 10 years now, and of course it's a Japanese court, so maybe things take a little bit longer, and things were a little bit more complicated. But we're already hearing since like last year that apparently this year people should get their coins back. And first it was called, was supposed to be in January, then March, then June, and then September now. So this is like being pushed out a little bit. And while of course a lot of people are upset that lost tokens, but Bitcoin traded at like $500 back then. So, a lot of people that are getting some money back might actually be handsomely rewarded, even they will not get all their money back. But I think the other, I mean, you made the comparison with FTX. I mean, Mt. Gox doesn't have so many, I guess, lawyers involved that are trying to reclaim the funds, right? And we already heard that the lawyers are probably going to spend like $1 billion, or going to get, they're going to bill the creditors of the FTX exchange probably like $1 billion if you extrapolate the money that they have been collected already so far into year end. So of course a lot of money is going to the lawyers, the U.S. court system. So it's a little bit different. But yeah, I think the Mt. Gox case was really interesting, because it was also, another company was involved in the U.S. that was trying to set up a faster Mt. Gox to channel money faster into Bitcoin. And it was really like a time when a lot of things were really kind of like moving together. And this is in 2013. I think a lot of stuff happened during that year.
Yes, it was definitely one of the more bullish times for we have gone through the bull and bear cycles, right, for the crypto industry. And I think 2013 was really that bullish time when a lot of things were being built, a lot of foundations were being laid. And it was important because, as you mentioned, even with Mt. Gox, it would take like a week for payments to get settled. And I don't know how people would do it, because a lot of the times people would literally put all of their money, and then, you just had to wait for a month to make sure that you get that money in Bitcoin back, right, into your wallet. I know a friend of mine here who had literally taken all of his life's worth, and a day before Mt. Gox went down, that is when he had all of his funds ready. And the next day, he was going to go and put all the money, his entire net worth, which at that time was $100,000. Now, his net worth is much more right now. But at that time, it was still like, all his cash and savings and everything he had, that was $100,000. And he was so bullish on crypto, he was ready to put all of that in Bitcoin. And Mt. Gox was the only way to really get it done. He was going to talk to a broker the next day. And, it's just like a day before that the entire Mt. Gox came down stumbling. So he was just saved by a single day, to be honest, or else he would have put all of his money. And then when you take all of your savings, and that's why we say that, obviously don't put all your eggs into the same basket. But people are enterprising, they want to take risks, right? Sometimes people are so bullish on something, they'll go and put all of their money on it. So those things could happen. But anyway, I'm
Well,
just glad.
but you could also argue, right, if he would have put the money in, right, and maybe half the money would have been lost, maybe that would have been fine, right? Because he would have not been able to sell the $50,000 he had still in Bitcoin. And again, Bitcoin prices, were like $500 at the time when the Mt. Gox exchange went under, I think. So maybe he would be, had like several million now, right? So I think you can argue like two ways. It's really like the difference, how do you lose the money, right? Do you lose the money because the exchange goes bust, or do you lose the money because, there's a misappropriation of coins and everything? But I think the other interesting aspect is, initially when people wanted to buy on Mt. Gox, they needed to send money into the personal bank account of the CEO because they didn't have a company bank account. I mean, this is also like crazy to like imagine if he would just send money to to somebody, I don't know, like in Japan, right, into his
It's a
personal
big
bank account.
trust issue, right?
Yeah.
I mean, Bitcoin, all DeFi is supposed to be a trustless ecosystem. But here,
Yeah.
when you're sending the money to a single person, it's a lot of trust that you have to have in that person, that, this person will change your money and give you back your money, because there were no regulations. Today, I feel like Japan has one of the best regulations, right? In the crypto industry, at least they are regulated. They can make sense of things. Like with the whole FTX fiasco, if I'm not wrong, Japan is the only place where all the investors are getting all of their money back, right? Even with the downfall of FTX. But yes, I'm sorry, I
Yes.
didn't mean to interrupt. He actually he has bought Bitcoin at $200 and stuff too. But that's one of the things, right? A lot of the times people are like, oh, if you bought Bitcoin at 200, only if they're riding it hard all this time, they would be sitting on like, Bitcoin at $30,000. But a lot of people I know, they are obviously traders, gotten at 200, sold at 1,000. For a lot of people, even 5x, 10x was still a pretty big deal, right? Like, Bitcoin going all the way up there. Most for a lot of the people, this was money that they were like, oh yeah, my friend spoke about Bitcoin. Why not just throw in $5,000 or $10,000? And now suddenly those $5,000 to $10,000 have become like the biggest investment of their life, biggest part of their portfolio. Sorry, I didn't mean to interrupt you though, Marcus, but I would love to ask you about the cycle. So in your book, in Crypto Titans, you talk about the 4 cycles, the 4 bull and bear runs we have seen in the crypto industry. And I would like to ask you, which time era does it really start from? Because many folks don't necessarily talk about the entire history about Bitcoin and the entire history of this industry dating back to 2009. Most of the activity started around 2011, 12, 13. 13 is also when you came in. So I would love for you to just talk about those 4 cycles, in fact, right? And just talk about it. Like, what were the indicators? What happened in each of those 4 cycles? Would love to hear from you.
Yeah, I think, it's, but to a lot of people, history sounds always like a little bit boring, but I think history is actually very important. And I think
Yeah.
with the understanding of history, I think you can actually make a lot of better decisions and really understand this whole industry, where it came from and where it's going. And I think, for example, this is why I wrote this book, because this book, you can read it over the weekend, and I think you're gonna agree that you have learned, like, 100 times more than you knew before, no matter how much experience you have. And so when I look at really like the history of Bitcoin, and there were 4 distinct bull markets. So there was one in 2011, driven by Bitcoin as a new form of payment. There was another one driven in 2011, and it was really driven by China as a way to kind of like transfer also money and get like another investment opportunity. And it was suddenly used also by some Chinese companies as a payment mechanism for online goods. And then we had, of course, the 2017 bull market, which was set around the ICO raising capital for a lot of the projects. So it was an alternative way to raise capital. And then 2021, which was more kind of like the DeFi summer yield farming bull market. And these bull markets were all different. They all had, for example, different players, different exchanges were really leading this task. But it's also, there was usually like some invention that really changed like the dynamics a little bit. And this is why I would also argue that looking at the history, or let's say over the last 2 bull markets, the coins and tokens that did really well might actually not come back as we have seen before. So the only constant I start to realize is actually that Bitcoin has made a new high, but some of the tokens, for example, of the 2017 bull market, have not made new highs in 2021. So of course, if you're like a project or a protocol that raised really late in the 2017 bull market, I think then you had a fair chance because you haven't really deployed a lot of the capital. But if you have like started 2016 and your token was like trading already then, and of course, then you had like a relatively low chance to really participate in the 2021 bull market. So this is why I think it's very important to stay on top of the market, to understand which projects are really driving the bull market. And it's really like being informed. And I think this is really the key difference between some retail investors with institutional investors, because institutional investors, you spend like all day really looking at these things and analyzing things. And I think an important factor is, as you mentioned earlier, is of course Japan, because Japan put actually regulation in place after the 2017 bull market. And Japan was also very strong in adopting Bitcoin as a payment system. You could pay actually in Bitcoin in like 200,000 shops in Japan. So already like in 2017, of course, it didn't really, it's not really established itself, but Japan actually sets the level playing field, and also on the regulatory side. So exchanges were required to segregate client accounts. Exchanges were required to provide audit accounts. Exchanges were required to put money in cold, or tokens in cold storage. And this is why, as you correctly said, some of these FTX, users, they hardly have lost any money in Japan, because the regulator has just ring-fenced the exchanges. And I think this is something that other countries and other regulators can really learn from.
Absolutely. I feel that if you see a country that has been able to successfully put regulations in place that are actually not regressive, right? Because at the moment, even US has been looking at regulations, but then trying to just say, okay, Cardano, Solana, Polygon, all of these currencies are securities, right? Just making blanket statements, and they're going beyond 3 currencies. But the idea with SEC always is to go behind a couple of big fish, try to get a precedent set, and then that precedence will apply to so many other altcoins that are there. And I also love the fact that you spoke about coins other than Bitcoin, right? So, folks who are listening in, again, we are listening to the Silicon Dreams on Radio Zindagi, 15:50 a.m. I am Soniya Ahuja, the founder and CEO of Orbis 86. With me in the studio, I have Markus, and Markus is the head of research and strategy at Matrixport. So, Markus, you were talking about Bitcoin and other cryptocurrencies. Now, folks who are listening in, you might often hear the term altcoins, and altcoins are actually referring to any coin that is not a Bitcoin. And obviously, the altcoin market, one of the names that stands out from the rest is Ethereum, right? And I don't think people really look at Ethereum so much as an altcoin now, because it has been a constant since it launched. In fact, one of the things I tell people to do is just go and look at the top 10 cryptocurrencies like 5 or 6 years back. Out of those top 10 cryptocurrencies, if you look at the top 10 cryptocurrencies now, you will only recognize maybe a couple of names: Bitcoin, Ethereum, Litecoin, if we just, were to travel back 5 to 6 years now. And even the Litecoin momentum is obviously much slower. Many people who are listening into the show might not even know what Litecoin is. So yes, these markets, as Markus was sharing, it is a cyclical market. And then, people who are investing in it, look at it, are trying to break it down, trying to find patterns. Before we move ahead, Markus, I want to ask you, what kind of a market are we in right now? Is it a bullish market or a bearish market?
Well, I think it's a bullish market, right? We had, of course, a strong rally, but it might not be a bull market, right? Because I would define, normally I think in traditional finance, a bull market is defined as long as or as soon as the S&P rises by 20% from the low, and it's a bear market as soon as it drops 20% from the high. And in crypto, I think, because we have a lot of moments, a lot of months, a lot of quarters when actually Bitcoin rises by 20%. So we would probably have like 100 bull markets. And of course, you cannot analyze them. Some of them are really driven by, by just some flows. So you need like a longer and a stronger story. And I think this is what I was really trying to identify with the book, is really like, okay, what are the real bull markets? And the bull markets in crypto are not really just like up 20%. They're really up a few 100%, right? So for example, the bull market in 2013, it was a rally of like 5,400%. So it was like, like a monster rally. And there were like, various factors that really drove this. On the one side, of course, we had the European debt crisis. So Cyprus was bailing in depositors. So it's a little bit similar of what we heard with Silicon Valley Bank, March this year, but we had this already like happening in Cyprus, and it was a big factor of adoption. Other issues was, of course, in 2013 that China was a big supporter of Bitcoin and opened it up, and various factors. So it's really these four bull markets that I've just mentioned, 2011, 13, and 17, and 21, that were really like the big drivers for the crypto market. And I look at it right now, we are, of course, in a pattern where we had the tailwind last year from the Fed hiking interest rates. And since November, December last year, we actually are in a bullish pattern, but it's not really a bull market. And there are two factors, I think they're the big drivers right now. So number one is, of course, the Federal Reserve in the US has sort of like stopped hiking interest rates. The market has anticipated this. I would argue they probably can pause here and have paused for the remainder of the year. And I think this is setting off, some liquidity that is really finding its way into Bitcoin. But the other interesting aspect, people talk about the halving cycle, which happens every 4 years. So the miners get less rewards for the so-called Bitcoin puzzle that they mine, and then get these rewards in terms of Bitcoin as rewards basically paid out. But the analysis I've actually done is, the mining event, or the halving event, 15 to 16 months before the event, Bitcoin tends to bottom. And of course, we don't have too many data points because it's relatively new. It's just like, let's say, like a decade of history. But this was kind of like setting the kind of like the estimated low for December last year, and Bitcoin was like at 17,000, and we wrote a report about it. And of course, we made this also like public, so people like are aware of it. And it was covered, of course, in many of the major crypto news outlets. But that was kind of like our I guess call it our kickstart, our rocket launch, where we said, you know what, historically November, December, 16 months before the halving, which is expected kind of like March, April, May next year. So it moves a little bit because of the transaction counts that is important to determine. But this is when we started to write a report about it, and we look at a lot of those data points, and I can name you many, many more for this year that are mysteriously really worked, most of them. And this is kind of like how we approach the market as well.
Thank you. A lot of people, thanks for talking about Bitcoin's halving cycles, right? Many people aren't aware about how that functions, what is happening. I do want to ask you that obviously we are in sort of a bullish market right now. Bitcoin, again, is back up above 30,000. It has been struggling to maintain that 30,000 floor, though, for a little bit. It creeps over 30,000, then it tends to drop back down. So we'll see, how long it can hold the 30,000 floor, and if from there we can see a rally, I think there would be more bullish sentiment entering the market in general. That being said, though, when we are talking about the momentum of the crypto market, do you feel that the momentum of the crypto market is mainly driven by just Bitcoin? And in presenting that view, maybe you can also talk about the total market capitalization, the total market cap of the crypto industry, and what percentage of that is Bitcoin's market cap?
Yeah, good point. I mean, Bitcoin itself is around 58% right now of the crypto market, and of course this has been rising from last year, from a low of like 40%, or even in the mid 30s. So Bitcoin has become, actually, of course, at the beginning it was just Bitcoin, and then more altcoins came, other coins came, but it has really seen a big revival where we really rallied from mid 30s to now 58%. And the total value of the crypto market is around 1.3 trillion. At the peak, we were around 3 trillion. So we have dropped, let's say, like 50%, a bit over 50%. But it's really Bitcoin's outperformance. And I would argue that besides the first or maybe the second bull market, but certainly the third and the fourth bull market, it was, yes, Bitcoin went up, but it was not the main driver. It was not the main story, right? Of course, 2021, we had like different stories of the yield farming. We also had the NFT craze. So these are like projects and protocols that really went up multiple times and was really like the headline grabbing. It was really, maybe Bitcoin was for the institutions the easiest way to get in. And that's why I would argue that we are not really in a real bull market. We are in a bullish market. We're not in a real bull market because it's not really clear what is really the next driver. I think we can, of course, speculate what might be the next driver, but I think it's a little bit slow progressing here. But nevertheless, I think, and as you said previously, you can make money in every kind of market. If it's a bull, bear, range market, it's really like understanding where we are and really just playing the odds. And I would also agree that, we might see a little sell-off here, and it is because sentiment, and we have constructed our own sentiment index, it's really exuberant, and we have looked at this, of course, historically. The last time it was exuberant, we were, like I said, like at 25,000 in Bitcoin prices, and then we dropped to 20,000, and now we have rallied to like kind of like 30,000. And I think we have a little consolidation, like a couple of days consolidation, but I think then we can make the next leg higher, because I think there's also some interesting stats why Bitcoin actually can perform really well this year.
All right. Well, actually, that was the next thing that I was going to ask you, that with the Bitcoin halving coming up in 2024, the last halving happened in 2020, right? And the next halving is about to happen in 2024. So people are really watching the market because, as you said, many people conceive that the crypto market generally turns bullish when the halving event happens. But even just besides that, typically in crypto, we have seen a 4 to 6 week cycle, right? And like you said, we don't have a lot of data, but anywhere between maybe not 4 to 6, even like 3 to 6 years cycle where the prices change. We go from a bull to a bear market and vice versa. I know no one can predict what would be the next driver for the next bullish market, but based on all the research and analysis you do, I would love to hear some of your speculations. When do you think we might look at the next bull market? And folks, again, if you're listening to the Silicon Dreams here on Radio Zindagi, these conversations are opinions. They are not meant to be financial advice for anyone to go and invest in crypto, but these are just conversations that you all can have insights into. And whenever, no matter, whatever kind of money you're trading, whether it is your fiat money, whether it is cryptocurrencies, whether it's any other form of money that you want to trade, you should always understand what you're getting into, right? So you have to do that research yourself. Even if you have consultants, like if you are a big family office, you probably have managers managing all of this for you. But no matter who is managing your assets, you need to have some basic understanding of where exactly your money is being put into, right? And especially if you're just a simple retail investor and you manage all of your assets, that due diligence that you have to do, whether it is also in betting on a company in the stock market, right? That due diligence just doubles, triples, or even 5x's, right? Because you need to really understand where are you putting your money into. That's one of the things. And maybe Marcus, with you evaluating both sides of the market, I would love to hear your thoughts on it. But normally we are in a position right now where most of the people, I don't think I would be wrong if I said even 99% of the people were really into crypto because they are trading crypto. And when Bitcoin started, the white paper was around creating a currency that was not tied to sovereign entities so that everybody could get a more level playing field, and you did not have a few people controlling the entire circulation of currency and just democratizing access to currency in a way, right? However, I wouldn't be wrong, I feel like, if I said 99% of the people are looking at cryptocurrency as not a currency, but as a form of investment, right? And they're trying to see if they can quickly make 5x, 10x, 100x from that investment. So with that sentiment in mind, well, we'll touch upon it. Like, what are your thoughts on Bitcoin or any of these currencies as a decentralized currency versus an investment? We'll talk about that. But before we touch upon that topic, I would love to ask you, what are you speculating? When do you think will the next bull cycle perhaps be around? And what do you think, and looking at all the indicators, right? What do you think are some of the key drivers here, right, that might actually result in the next bull run?
Yeah, of course, I'm looking a lot of, on-chain data. Every morning when I get up, I have a model running, let's say, 5,000 data points, what's happening in the crypto market, really, from everything where we think money is going, price action, volumes, all of these things to really just understand really what's happening, where people are negative, and it's a lot of data. It's a lot of data focused. Of course, I don't look at every single point. I have a system to sort it all out for me and to just tell me what's the most important factors. Some people saying it might be, real world assets, so the tokenization of like real estate, for example. Other people talk about, it might be NFTs coming back. For example, the vaccine. The vaccine record, if you would have this as an NFT and you travel from one country to another, it could have been like universally accepted. Immigration officer could have just like checked like the blockchain, with some like really cheap blockchain, if your record is there, if it's, so I think, this can also then lead to, for example, driver's license and other important documents, IDs, college degrees, everything really on the blockchain and really, easily accessible for people, and so on. I think, there are various forms, and I think I would argue we don't know it yet, right? There are around like 420 million people who hold cryptocurrencies in the world. So the interest is definitely there from people, and I think the regulator is realizing this as well, that they have to act. I think institutional investors also are aware that they have to act and prepare, because there is this really like demand from a lot of people. And when we look at history, of course, those bull markets, they came within like 2 to kind of like 4 years. So of course we had a bull market in 21, so we could have one in 23. But I would argue it's difficult to see what are really the themes and drivers. Maybe there will be a bull market next year. I think right now it's a little bit kind of the odds that we were playing, right? Of course, we know some other stuff that's happening. One interesting, odd or, number or probability I would indicated that 15 to 16 months before the next halving is usually the major structural low for Bitcoin. Then, for example, and a lot of people are familiar with this, for the stock market, there's something called the January effect. So every time the S&P, the stock market is up in January, it usually carries over into the rest of the year because it sets a sentiment. And in 5 out of the 6 years when Bitcoin was up in January, Bitcoin actually rallied for the continuous for the remaining of the year from February until December. And the last 2 times this happened, actually Bitcoin doubled, and of course the previous years it even went up more. But if this is the case, then Bitcoin was, for example, on February 1st, Bitcoin was at 22,000, and this would imply that 44,000, 45,000, and this is like a price target we came up with during in one of our reports. But the other aspect is, of course, that BlackRock has announced that they're gonna come up with an ETF, and the chances are apparently quite high for them that they can launch this ETF, this Bitcoin ETF. And this reminds me a little bit, and I wrote about it also in the book in 2017, where we had the Chicago Mercantile Exchange, which is the largest futures exchange for stock futures and other futures. When they came up with a Bitcoin future in December 2017, and of course the launch was sort of like the peak of their bull market, but nevertheless we had like a strong rally into the launch. And I think maybe we're seeing something similar now, where people buying ahead of the launch of the BlackRock ETF because they have just applied for it. It might take at a minimum 45 days until it's approved by the SEC, and then there might be some other delay to set it up internally. They're already running the strategy from like last year for like their private clients. So I think there is an argument, that they can bring forward to the SEC that operationally they're all sound. They have tested this, but nevertheless, it might still be a couple of months or maybe a quarter or 2 or 3 away. But maybe the market runs into this event and really rallies strongly, because we have seen this in 2017 as well.
So, folks, if you haven't heard about BlackRock, you can obviously go and Google them. But BlackRock, they actually have a very good history of ETFs, as Marcus was pointing out. So first of all, BlackRock right now, I think they have about 1.3 trillion, but yes, north of $1 trillion, guys, $1 trillion in assets under management. So BlackRock isn't just some other firm, that has been around for just like a couple of days now, right? They have been here for a few years, decades. They have northwards of $1 trillion in assets under management. And the reason why a lot of people are very bullish about the Bitcoin ETF going through is because the track record of ETFs suggested, launched by BlackRock, being approved, their track record is pretty spectacular. They have applied for over 500 ETFs, and I don't remember the exact number, but it's over 500. And out of those 500 plus applications, only one application was ever denied by SEC. So people are really looking at this as a more positive signal, right? Thinking that, hey, it would again make the whole cryptocurrency thing more legitimate, also help with regulations, with the positive sentiment, just bring more people into crypto. Talking about onboarding into the world of decentralized finance or the world of Web3, I want to ask you, Marcus, do you think we will get into a future? I know you spoke about Japan trying to accept Bitcoin at over 200 shops. We also saw El Salvador do that. Like, literally, for a lot of people might not know this, but Bitcoin is actually one of El Salvador's primary currency. It's like their national currency. So they tried to do that. They tried to create systems that people could pay with Bitcoin, but we haven't really seen any successful implementation of cryptocurrency being integrated into our daily lives, where you can go and use it as a currency to pay your workers, right? To pay your maid, let's say, to go to a grocery shop and buy groceries, to pay for your tolls and tickets. We haven't really seen that adoption of a currency, but the white paper was central all around creating that decentralized currency. So, in your view, Marcus, do you think this will change? And if yes, how long you think it might be before cryptocurrency, maybe it's not Bitcoin, but maybe some other currencies, they become a form of trading? And the reason why I said that, personally, now this is just my opinion, obviously the amount of research I do, or it is very negligent, right, compared to the amount of hours you're spending researching. So again, as a person who has been in the Web3 space for a couple of years now, I feel like Bitcoin has achieved that status of digital gold. And we all have gold, but we no longer go and pay in gold coins, right? People always save on to gold because its value is appreciating, and they look at gold as a hedge against inflation. Similarly, for a long time, Bitcoin was also argued to be a hedge against inflation because, unlike regular currencies, which are inflationary in nature, Bitcoin is deflationary. That being said, what are your thoughts? Do you think we'll ever get to a point where cryptocurrencies become mainstream? A mainstream currency, I should say.
Yeah, I mean, look, we have many different currencies in the world, right? Some successful, some less successful. Maybe technology just takes a little bit longer. I mean, there are like 420 million people, as I was saying earlier, who hold cryptocurrencies. So I think you can argue that a lot of people actually hold this currency because how many people are holding British pound, for example, right? Is it, I don't know, is it 100 million? So it might be already one of these currencies that has been being adopted already, but maybe there needs to be some upgrade, because even like the Bitcoin version of 2008, it has gone through some various upgrades, and it might be upgraded from time to time as well. And a lot of people are not aware of some of those upgrades. Again, I wrote about a little bit in the book as well, because it's just to help people like understand. Because yes, there can only be produced like 21 million bitcoins, but of course the usage and some of the underlying code that can be like altered a little bit, and changed, and really make it a little bit more user friendly, right? So the question came actually up a few years ago: is Bitcoin going to be a store of value, or it's going to be more a transactional currency? And of course, there have been various proposals, and then there is a committee to vote on it, and some of the miners can vote on it because they have they have a lot of power in deciding where Bitcoin is going. And that's why we have seen some forks, right? We have some forks of Bitcoin Cash, for example, and we have seen other forks, Bitcoin as V as well, and so on. I think it's really, I think to be optimistic on Bitcoin is a little bit, in my view, to be optimistic on humanity, because I think humanity is a lot about technological innovation. And I think there are so many people working on some upgrades, so many people working in Web3, so many universities are really teaching the subject now. People are interested in blockchain. I think there is this enormous interest in it. And any event I go, be it like a private event, be it like an event, like a school event, for example, if people or parents know that I do something in crypto, everybody suddenly wants to talk about it. I mean, it's I guess if I would be a lawyer, people maybe want to talk about some cases that they maybe have been like personally involved with. But I think crypto, everybody has an interest, and I think everybody is curious. Everybody wants to learn. A lot of people are a little bit afraid to learn, and I think nobody wants to pick up a book and like what is blockchain and go through some hard numbers. But I think that's why I realized that I think the best way for people to learn is just learn about the industry, how it started, how it evolved, and maybe then kind of like understand where it might be going. And I think the key point I think to understand is that there are like really like hundreds of millions of people now involved in crypto, and a lot of those people, they just don't want to go back. They don't, they think it's fascinating. We're using a lot more technology in our lives, so the only constant is really that money has been stayed more or less the same for hundreds of years almost
It
now.
is ripe for disruption, right? Don't you feel that economics,
Yeah.
the world economics is actually ripe for disruption now?
Yeah.
Well, Markus, it was lovely talking to you. Before we conclude our episode for today, I would love for you to spend a couple of minutes talking about your new book. Where can people find this book? The book, guys, is titled Crypto Titans. I'm going to let Markus go and talk a little bit about his book. What can the audiences who are listening to the Silicon Dreams here expect to find in the book, and where can they go and get a copy of this book?
Yeah, thanks, Soniya. So the book, Crypto Titans, How Trillions Were Made and Billions Were Lost in the Cryptocurrency Market. So it just came out, last month. It's a very well-researched book. It has more than 330 references. It's actually 360 pages. So it's almost like, one reference per page almost. And it really starts from the crypto industry, how it started, who are the players, who are the companies, what were the drivers of the bull markets, why we went down. And yes, regulation has come before. And I think, it turns out like a really good reference book because, as I was saying earlier, we're talking about the BlackRock ETF being a big driver now. Well, you can easily look at the book and then you see the CME, Chicago Mercantile Exchange, listing of the Bitcoin future as a big driver. You can look when any news comes out. And of course, it has the whole saga of FTX in it. How did these people lose so much money? How did they steal so much money? Again, the book is really up to date also because it came just out. But a lot of those events of the trial that's coming up with Sam Bankman-Fried, that's coming up in October. So everything that has been like revealed over the last few weeks, it's actually all in the book. Also about Binance, why is Binance important? Why Binance grew so quickly? What was the number one trigger that really made Binance from a 10% market share exchange to a 25% market share exchange? And there was one event that happened overnight very quickly, and that really put Binance on the spot. And I think the book really tries to identify a lot of those events that turned out to be like big turning points. And I think this is very important just for people to understand. And you can get it on Amazon. You can probably get it in your local bookstore. Amazon is, of course, the easiest thing these days right now. It's available in Kindle, in hard case, or in paperback.
Well, I was going to ask a question as to, what was that event that happened that just skyrocketed Binance. But you know what? I'm just going to let people go and buy the book and then figure it out because I'm pretty sure a lot of the listeners would be curious too. Okay, what was it that happened? So guys, go and take a look at the book. And again, Markus, if you don't follow him, go and look him up on LinkedIn. Markus, would you like to share your details? Where can people give you a follow on socials?
Yeah, so on socials, I'm most active on LinkedIn. So it's really, Markus Thielen, and I'm sure you can leave something in the show notes, but Thielen is the last name. You can find me there. On Twitter, I'm on DeFi on Target. That's my Twitter handle. And that's really, where I'm most active. But it's really like on LinkedIn. Yeah, I think that's the best way to get in touch.
All right, so folks, you can look for Markus Thielen on LinkedIn. Again, it's Markus if you're looking for Markus. Normally, people might use a C. It's Markus. Markus Thielen, Thielen. Go and look him up. You will obviously benefit a lot from reading all the analysis that he posts on a very regular basis. I have been personally enjoying that. It's a lot of great learning points. Obviously, that knowledge is freely accessible, which makes it that much more valuable because you're not paying any costs to access the really detailed breakdowns and stuff that he shares. He summarizes it really nicely. So, I'm always looking forward to that newsletter of yours too, Markus. And with that, folks, we are coming to a close of our episode today. Markus, thank you so much for joining us today on the segment of the Silicon Dreams. And everybody listening in, this is your RJ Soniya signing off until next time. And again, if you're in the world of crypto, you're in the world of Web3. If you're trying to get into the world of Web3, be safe. We are still in uncharted territories. And remember one thing, not your keys, not your crypto. So try to go and Google this phrase, research it a little bit. And I would say at this point, I'm still going to tell people, enter at your own risk. Even though I've been in the crypto space and I'm bullish on it, yet when folks come in, we want to make sure that you're not just coming in because of an emotional high, but you come in after doing some well-founded research. And that is the reason why, I'm so glad to have Markus, who is an amazing analyst on both sides of finance, centralized and DeFi, join us on the show today. All right, guys, so this is Soniya signing off. Take care, stay safe, and tune in next week for another episode of the Silicon Dreams on Radio Zindagi 15:50 a.m.